Well, folks, what an absolute mess we have on our hands. I'm about to take you through a disaster of things, essentially. It's bad news on bad news on bad news. I've got a lot to share with you in this video and kind of my perspective on all this. And, if you're worried about the economy, I think there's going to be a lot that needs to be understood based upon the information I'm going to share with you in this video. If you're worried about the stock market and what's going to happen with the stock market over the coming months, I think you're going to get a lot of details around that in this video as well. Hope you guys enjoy it, even though it's a lot of, let's call it bad news, okay? So first off here, Amazon. Stock's getting killed after hours. I think probably most people have seen this now. Amazon's down 12+%. This is a $1.47 trillion market cap on Amazon. So when you're talking about a move down like this for Amazon, it's going to move the entire market. It's just that big of a company. It will move anything e-commerce related, anything even consumer related. It's going to move those sorts of stocks. And Amazon now, to me, represents one of the best barometers on how the overall economy is doing, because Amazon is so big nowadays. And like, dude, who doesn't order from Amazon? And so if the economy is very strong, generally speaking, you're going to see Amazon be strong, because that's going to mean people are ordering more stuff. And if that's not the situation, then obviously the consumer is being hurt in some sort of way, right? Now, the headline right off the bat is awful, right? Amazon shares fall on bleak forecast, the slowest growth since the dot-com bust. I mean, no one wants to see a headline like that. That's absolutely disastrous, right? When you're talking about the slowest growth since the dot-com bust, oh boy, okay. They were hit by this one-time cost as well that really damaged their numbers from Rivian. So Rivian, that obviously, I don't know if you guys have seen Rivian's stock price, but it's plummeted, and that's obviously hurt Amazon, because they have to kind of recognize that as a loss, essentially. So earnings came in on an adjusted basis, 738 versus 836. Let me be very clear. You can't miss. You can't miss in this market. If you miss in this market, you're going down big. And that's why the stock's down 12%. You can't miss. Like, even if you come in with a slight beat, you're probably still going down on your stock price in this sort of vicious market. Never mind if you come in and miss. Oh my gosh, it's a disaster. Revenue came in at a slight beat. Amazon Web Services, slight beat. Advertising missed. Obviously, they had that one huge negative cost, one-time kind of, hit from Rivian, but that could also get hit next quarter as well, so do keep that in mind. Revenue increased 7%. That's horrible for Amazon. Amazon usually, you should expect that company to grow 15-20% a quarter. So when they come in at 7%, that's awful, right? But the previous year, in the same quarter, they grew 44%, right? The second quarter forecast is a disaster. They expect 3 to 7% growth. That's awful. I mean, look, they're expecting a midpoint here of $119 billion, $118 billion midpoint. Analysts on average we're at $125 billion for this upcoming quarter. This is a disaster, man. I mean, just plain disaster. And the thing with a company like Amazon is, if you see these numbers so troubling like that, this is not a situation here where it's Amazon's fault and like Amazon's doing something wrong and somebody's coming to eat Amazon's lunch. It's not like that at all. It's just like the money's not there right now. And that's why they can't put up the numbers. People aren't, as enthusiastic to order a bunch of stuff right now. And obviously, based upon their guidance, it's even worse for this next quarter, which is a kind of this troubling spell you get into, and especially if you're worried about the economy, where it's like, okay, wait a minute. This last quarter, they grew 7%. Now they're expecting maybe 5% growth this upcoming quarter. And last quarter was the toughest comp. The comps get easier, and your numbers are going to get worse. Oh, boy. Okay. That is not a good situation. Now, Amazon, let me be very clear before we move on here. Amazon is a buy for a long-term shareholder. I'm going to probably be buying the stock for the next 6 months, I would say, as long as it continues to just kind of downtrend or be anywhere close to where it is after hours. I think it's a great buy for a long-term investor. But in the short term, you can't deny the fact that this is a company that is in trouble. And I don't mean trouble as in like, oh, they're going to go bankrupt or, the business is a disaster. It's just like, when you're talking about Amazon coming in at next quarter at 5% growth, oh gosh, man. That means the overall economy is in some trouble right now, okay? If anybody, by the way, somebody won the Powerball in Arizona. I saw this while I was on CNBC as well. So, give your boy a loan. I just need like maybe 10 mil of that. I'd be fine with that, okay? Apple came in with a great beat on EPS, $1.52 versus $1.43 was expected. Revenue beat by, $3.5 billion roughly. iPhone revenue beat. Services revenue beat. Other product revenue slightly missed. Mac revenue beat. iPad revenue beat. Gross margins beat. They also announced they're doing a $90 billion buyback. And they also are going to up their dividend. So let me be very clear. That's a great earnings. That is a great earnings. Apple somehow, miraculously, puts together these quarters that just make you shake your head and be like, how the hell did they do it, man? That was another amazing quarter. And this is after last quarter. This company reported an A+ quarter. And that was one of those quarters where I was like, how the hell do they do this, man? They pull rabbits out of the hat. It's like a magic show. And it's like, how do they keep putting these sick numbers together quarter after quarter after quarter when you just think, okay, maybe now Apple's going to fall a bit, and they just somehow put it together. And when you see this in this sort of market, a company like Apple just pull rabbits out of the hat and just somehow have these amazing numbers, you think to yourself, okay, your stock price is going to have to be up after hours after a ridiculously great quarter like that, right? No, stock price is now down over 4%. That's how the stock is treated in this sort of market. What this tells you right in front of your eyeballs right there after Apple comes off that quarter is there's no hope for this market right now in the short term. No hope at all. Okay? Make that very clear. When Apple comes out and reports that insane of a quarter, beat after beat after beat in this sort of horrible environment to try to operate a business in with supply chains messed up and everything. And they pull rabbits out of the hat and it's magic show everywhere. And when their stock price still can't go up, there's no hope in the short term for the stock market. It doesn't matter. Because here's the thing with Apple, right? Everybody sees those great numbers and they say, great numbers, Apple. Good job. Next quarter is going to be bad. Wait till the next quarter after that. That's going to be bad. And your numbers are going to start getting hit. And so it doesn't really matter even what Apple puts up because people are just going to say, it's going to get bad after this, man. And so they're just in a horrible position, as with all stocks pretty much in the market right now. And especially these ones are the biggest danger. And that's where people get confused in the market. They see the ones that have been hit very hard and they think that's where the biggest danger is. It's not. It's actually in the ones that have held up the best. I've been telling you guys this for a bit. I'm worried about stocks like Apple. I'm worried about stocks like Tesla, like I own, and look at how bad Tesla's been hit over the past week or so. Stocks down over 20%. Nvidia, AMD, those sorts of stocks, and they're falling apart, man. Those are the stocks I worry about the most in this sort of market because the mids and smalls have already gotten slammed so hard it doesn't even matter at any point. It's the stocks that have been holding up well. That's where the risk is in this market, in my opinion, and we're starting to really see it play out. Okay, Intel. They're down after hours as well. They could be at a 52-week low tomorrow. We'll see where trading kind of shakes out at. They guided low as well. This is obviously just a massive chip company, and this can ultimately move the entire semiconductor industry. And so if Intel's down, it's going to pull almost everything down. It's almost a $200 billion market cap on this company. And for them to guide low is just obviously not a situation anybody wants to see. I don't know. We'll say with Intel, it's not my favorite stock, but I am considering this one for my dividends only account. We'll see. I've never owned Intel in my entire investing career, but maybe I end up buying this one in the dividend only account. It's got a nice yield on it. It's very low valuation. It's not obviously the most exciting growth play out there, but for a dividend play, I actually kind of like this one. I might end up buying it. Okay, this is pulling down Tesla. Tesla's down over 3% after hours. Tesla's a $900 billion market cap. If this one keeps pulling down, it's going to pull all growth stocks down even more. It's going to pull the entire market down. And when you hear, Amazon report troubling numbers with the consumer and things like that, eventually this stuff will catch up with Tesla, right? Tesla's got this big, that's what folks, I think a lot of Tesla bulls don't understand that I've been trying to explain to folks is Tesla has this massive back order of cars that have been placed, these orders, right, that are going through right now. So that's what's making their numbers look so great. But what about the orders coming in today, right? What about the orders that have been coming in April? What about the orders that are coming in May? That's the troubling, and that's what will hit Tesla in 2 quarters from now. It's not hitting them right now, but it's going to hit them in a couple quarters from now. And eventually, it doesn't matter. It doesn't matter how great your company is. It doesn't matter how much people want your products. If you're in an environment where the money's not there and you start getting into a recessionary type environment, right? if the money's not there, the money's not there. It doesn't matter how well you're running your business. Like, it's just not the money to be made, and you start missing numbers. You start missing guidance. The analysts have to start bringing down their EPS targets. They have to start bringing down their revenue targets, and you start becoming a disappointment. And not because you're a disappointing company or you don't know how to run your business. You start becoming that because, like, that's just where the market is at a given time, okay? And so, obviously this is a bad situation there, okay? Shopify finally had a relief rally day. It was up 6% today, up to $27 a share, and it's basically lost all that after hours. Shopify didn't have earnings, didn't have anything. But what they did have is Amazon come out and say that the consumer is weak right now, clearly in the numbers. If they didn't say that, it's clear in their numbers, and getting potentially weaker over the next quarter. And so for a stock like Shopify, they get hit. And so this stock could be at a 52-week low tomorrow. It's a very realistic possibility for a stock like Shopify to be at its 52-week low tomorrow. And they didn't even come out and say anything bad, right? Teladoc, this stock got hit 40% today. This is one of Cathie Wood's biggest positions, usually a top three. 40% down, and it was down another 3.5% after hours. And it's like, where's the bottom for the stock? At one point today, it was 28. And it's like, if the Nasdaq's in a bad place tomorrow, who's to say Teladoc can't be, even further down? Sometimes, you kind of got to wait 3 trading days before, these ones kind of actually reach their bottom. And so, a stock like Teladoc is just like, where's the hope? Look at the market cap on this one now, $5 billion. It's crazy because literally I remember they bought Livongo for $18 billion plus in summer of 2020. So it's crazy to think about that and think that this entire company, Livongo and Teladoc combined, is now $5 billion. Like, that's just insane. I think long-term Teladoc's a winner, but short-term it's a disaster. I think we all know that. It's just awful, right? The Hood reported earnings. I've been telling people this is a disaster, and it was a disaster, and now it just broke through another 52-week low. When it comes to Hood, the issue with the Hood is, and I should have honestly shorted the stock because I feel like I almost have like inside type information on this, even though I don't have any connections with Hood or anything like that, but I almost feel like I have inside information because I run this dang huge YouTube channel, and I get a gauge on what's going on in retail sentiment and retail stocks, and there's the excitement's not there right now. People have either left the market or they're clinging on for dear life, right? And then you have a small group that can buy stocks, right, that are in a financial position where they have more income on a monthly basis than expenses, and they're willing to buy. But even some folks that have more income than expenses on a monthly basis and see these stocks at insane valuations, or at least that we feel like are insane valuations, way too cheap. Some folks aren't willing to buy right now, even if they are in that financial position, because they see everything going down. They're like, dude, it's been going down since November, right? And so folks look at this and they're like, who's to say it's not going to be much lower? If you see Amazon at $2,500 tomorrow, some folks say, dude, it could be $2,400, $2,300 next month, or $2,200. Why do I have to go? There's no sense of urgency in the market. And that's a disaster for Robinhood. Never mind, there's a ton of competition for Robinhood. So they're faced with this overwhelming amount of competition out there in the market. Obviously, they did a lot, they made some mistakes that hurt their brand. But the third part is just, there's not that enthusiasm in the market right now. It's the people like me that are willing to continue to buy the dip, right? It's a very small minority. Let's be honest, it's a very small minority. And some of you guys that are, have my same type of mentality of like, I don't care if this market keeps going down, I'll buy all the way to the flipping flapjack and bottom, okay? We're a very small minority, okay? We're not the majority of Robinhood customers. I don't even use Robinhood personally, right? And so that's the other part. Some of us with that sort of mentality, right? Like we're relentless buyers. We buy. I don't care if it's a bull market, bear market, kangaroo market. We buy stocks that we love at valuations we love. A lot of us have been in the market for a long time. We don't use Hood. We use Fidelity or TD Ameritrade or other brokerages, right? And so that's another just troubling thing for a stock like Robinhood, and they can't get out of their own way. And this is, the fintech's a disaster right now. This is gonna end up pulling down SoFi and all those stocks tomorrow, more than likely as well. So all those ones will fall as well. Okay, that's the sort of market we're in right now. 2022. Let's be very, very clear about this. And I've been saying this for the last several months. This is a year. What it represents to me is an acquisition year, an accumulation year, where you just continue to buy stocks you love for the long term. And in the short term, it is a mess. In the short term, you got massive inflation. You got companies reporting troubling numbers. You got weak guidance from almost everybody. I mean, there's bad news after bad news after bad news after bad news in this sort of market right now. It is ugly, right? Ugly times ugly. But that's fine. Like it is what it is. Long term, all this stuff that we're going through right now is all just going to end up being a history lesson. And that's going to be that. And so, that's what I stay focused on, is just adding shares of companies I love. And you very rarely get these sorts of years where, companies can report good earnings and their stocks go down, bad earnings and their stocks get obliterated. You very rarely get those sorts of opportunities. And I look at countless stocks that are 52-week lows, multi-year lows. I got to shut off that thing behind me. It's distracting me right now. I'm going to put my head like this. There we go. That's a little better. Okay. I can't do it, man. Can't do it with that. Can't do it, man. Stocks at multi-year lows, 52-week lows, all-time lows. You very rarely get those sorts of years where you can just accumulate shares at 52-week lows, multi-year lows, and all-time lows. And so that's what I'm focused on. So, but no doubt is a disaster short term. Let me know what you guys are doing out there in the market. Love to hear from you as always. Much love and have a great day.